watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. Senate President Tito Soto says the signing of the 2022 national budget has been postponed. That's a delay that could affect financial markets looking for a spending plan that would support the economic recovery. Soto said no reason was given by Malacanang for the postponement of the signing of the record 5.02 trillion peso budget for next year. DBM officer in charge Tina Rose Maricandas earlier said that President Duterte was expected to sign the budget this afternoon. Candas said there were, quote, very few items that are up for veto. Congress ratified the bicameral conference committee on the national spending plan last December 15th. RCBC chief economist Mike Ricafort says delays to the signing of the budget could slow down economic recovery due to the lower spending on infrastructure and could also weigh on the sentiment in the local financial markets. Now, health authorities are noting an uptick in COVID numbers. That's as the public celebrates the holidays. In Metro Manila, the percentage of those who tested positive for COVID-19 already doubled in just 1 week. That's from 0.7% to 1.5%. Worse, given the lag time for reporting and the incubation period of the virus, this uptick does not even reflect the increased holiday activities just yet. And with that, infectious diseases expert Dr. Rontgina Solante is projecting a possible surge by the end of January. Local experts agree that it is just a matter of time before an Omicron-driven surge happens, especially after the DOH reported the country's fourth Omicron case just yesterday. Kicking off the markets report with some green, at least when we look at overseas equity markets. In fact, the S&P 500 overnight posted the 69th all-time high for 2021. That was led by energy and tech firms. And if you take a look at just how this is going, global shares are actually on the course for a third straight year of double-digit returns, which is generally powered by the U.S. rally. And despite the fact that there are a lot of risks on the table, when you look at Europe, it is still opening in the green, or at least closing in the green rather yesterday. France, for instance, has already said they will be making work from home compulsory 3 days a week. And now let's take a look over at the Asia Pacific Open. A lot of expectation here, and that seems to be coming into fruition, that we will be following that U.S. Record highs. Look at the Nikkei 225, that's up by 1.3% as of 20 minutes ago. You've also got a Singapore opening in the green. Generally, the Asian stocks are set for another enjoyable tailwind Tuesday here. There's a lot of optimism on the global recovery, particularly with the waning, let's say, risks from Omicron. But we do see Japan up, Hong Kong reopening right now after a holiday, although Australia remains closed for the celebrations. Now, let's take a look at how our own local bourse is doing. Not quite the same, but this, of course, came from, what we were seeing yesterday, which was quite a boost. We are just swinging to some losses here, down by 0.07% after having had quite an enjoyable ride just on Monday. Recall that despite all of these Omicron fears, and today we have another fourth case, we did bounce back. But analysts were warning turnovers were rather low, and that this was brought about simply by window dressing. Now, let's take a look at one specific sector I wanted to watch out for here, and those are the banks. I'll just pull out the one-day chart for you. That is up rather by 0.08%, so going against the rest of the tide of the index. And this on the back of interest rate caps, which are set to take effect in just about a week, according to the Bangko Sentral. Now, this according to Governor Ben Diokno, essentially what's going to be happening is they will be prescribing ceilings on the interest rate charges and just the general fees for these lending firms. You can see here, the general lending rate has nevertheless stayed at a record low here. This was a resolution that the Monetary Board issued last December 16, basically because there have been a lot of increases when it comes to interest rates being charged to consumers. So the BSP has set a nominal interest rate ceiling that's at 6% per month. That's around 0.2% per day for the covered loans. And he said that during the height of the COVID-19 pandemic last year, lending firms raised the interest rates to get this 504% per annum. That's around 42% per month. And the BSP is trying to protect us from that. Now, here to discuss whether the window dressing will prevail against conservatism, we have with us this morning Aaron Sai of First Metro Securities. Good morning, Aaron, and welcome.
Hi, good morning, Danny. Thanks for having me here.
Okay, Aaron, let's kick off with the general index and where the sentiment is tilted at. It's just been so confusing the past couple of weeks for the Philippines because when you look at the global picture, it seems to be, they've generally brushed out, the Omicron towards the end of the year and have really been focused on a third straight year of a rally despite COVID. Where do we stand here vis-a-vis the global equity story?
But I think the equity story, the risky asset story in general, are really improving as we have seen. Strides, in the progress of the world facing the COVID crisis. As we know, we have already vaccinated a bulk of a majority of the population, and even a lot of them or a lot of us have already gotten our booster already. So I think moving forward, no, the confidence will continue to grow. No, the confidence will continue to grow as we have seen in the how the equities market, especially in the US, not much yet. No, not much yet on the local space. No, but in the global equities markets, we have been trekking higher highs. No, especially for the SPX and S&P 500 and the Dow Jones. No, and that's our hope also for the PSEI. No, not necessarily reaching or beating the higher the all-time high yet, not at 9,000. I think it's too far off. No? But I think there could be a case for real recovery for next year.
But when we compare the earnings and the price earnings ratios of our index compared to the other countries, let's say the US, can we say that we are really, like when we look at the corporate performance, we are not there yet and we are unable to recover in the same earnings story as the rest of the world?
Yes, I think that's what the market is waiting. No, that's what the market is waiting for. I think we have not seen that much of a recovery as they have seen in other places. No, that's why the market is somehow lukewarm in our index names, even the biggest names in the market. No, I think um, the management, as we know, no, the management and the way that maybe the government or the economy has somehow managed, no, throughout the crisis are really different from really different in the Philippines as compared with other countries. But again, the recovery, no, or the maybe the waning of the effect of the COVID crisis, both on the numbers, no, on number of new cases, and on the confidence of the general population should also figure out in somehow improving earnings for our companies moving forward. How much that earnings growth would be moving forward, I think uh, would be would be big, especially for those companies that have really been hardly hit by the pandemic, now, especially the property sector and consumer.
Okay, let's talk about that. I have with me here, the year-to-date performance of different companies. It's quite a mixed picture. You've got, telcos, of course, it was expected in the top, but you've also got the losers like casinos, like you mentioned, property stocks. Just taking a step back and looking at 2021, do you feel that there are specific sectors, companies that surprise either on the upside, they perform better than expected, or worse than expected?
Definitely, the services sector, which is the top performing sector, no, I think up around more than 30% for the year, no, has been a really good surprise, no. But as we know, there was a turnaround in the telco space, no, which comprised, I think, bulk or majority of that sector. No, so I think that's a good sign. No, as we have seen that the economy really depends on the services of this telco. So really improving their services and really maybe having an optimistic view of their plans moving forward is really good, no, for the economy. But moving forward, I think again, as mentioned, the property sector has really been badly hit. As we know, there are concessions in their lease fees, no lease payments. I think it's for some they have already paired their accommodation, so to speak, no, for the lease payments. But moving forward, as we have seen the mall going public, no, or in general the patrons, no, patrons of this property companies really coming going back to their normal activities. Now, if you go by the malls, no, around the bigger malls there are, no, I think there's a Mall of Asia, a Mega Mall, etc. No, in the metro, or even in major cities outside Metro Manila, we have seen somehow a resumption to normal, or at least a feel of a resumption to normal. And I think this is a very, very big boost, no, for the property sector, which I think is still down at least more than 10% as of year to date.
Correct. So it's down by 12%. At what point can you say, Aaron, that worst is over, that has hit bottom, especially for the property players, like you mentioned? We need to learn to live with the virus, and we need to start reopening the economy, like you said. Is this already the time to be saying, okay, that's it, and we're gonna move forward?
Well, it will always remain probabilistic. No, it will always remain probabilistic, as we know, as we have witnessed. No, these companies have been very strong throughout the years, and they have been continuously improving. But they were hit hard, really, by the lockdowns as a result of the COVID. No, so I think by now we're seeing hundreds, no, so, or lower than 500 new cases. No, if we can keep that record, no, and maybe arrest the recently increasing positivity rate in the number of cases, no, of COVID, I think that would be a very good sign for us, really, to be again more confident, not only in the market, no, in the financial market, but also in our day-to-day real market activities. No, so I think at that point, when we see that really sustained, maybe for a couple of months, no, and when we see vaccination rate really achieving the target, or even exceeding the targets of our policymakers, I think that's the time that when we can already say that this can be there will be the light at the end of the tunnel is really near.
What are you looking at when you talk about consumption habits? Which indicators, which stocks are you looking at to determine whether consumers are really spending, and whether this recovery is going to be V-shaped? Now we've seen the Christmas period has already come and gone very quickly. This was our big chance to spend. Where is it headed now, and how are these consumption habits going to be doing in the short term?
Well, empirically, again, if you go around the city, you can already see it. No, in Filipino, parang walang makakapigil, no, walang makakapigil in the celebration of the Christmas season. Even amidst the threat of the Omicron variant, no. Empirically, that's that. No, numbers wise, we have seen corporates even reporting, even in the third quarter, the improving earnings already. No, but what's more important, if we look at moving forward, is the not really what we see the market or the population is consuming now, no, but their capability to consume more in the future. No? And again, the buildup of the savings throughout the pandemic really, I think, improved the probability, no, of higher consumption moving forward.
Okay, so you're seeing that now, my actual buildup of savings and revenge spending is still imminent.
I think so. Yes. Yes,
Okay,
I
sana
think.
naman. Okay, now speaking of consumption, you do have Frutas, which also just did an IPO and wants to IPO another part of their company. It's rather small compared to to other IPOs that have been happening. But what does this tell you about exactly what you were saying, that people are going to spend, people are going to still be eating out? This is a bakery called Balay, and I don't know whether this has anything to do with COVID, whether that's improved. But tell us the general sentiment, why this kind of IPO in this period, why we're still looking at food stocks.
Well, for one, I think I think Frutas Holdings now was well hit, no, very, very badly hit now by the pandemic. As we can see from the numbers, no, not unique to them, no, but more adversely affected them, no, compared to others. I think this fundraising activity is similar, no, with other companies, or even in other industries, no, as they are building their war chest, no, they are prepping themselves to face a better, no, hopefully better future moving forward. No, so I think the companies that will be spun off, no, for this IPO would be the three companies, so that the Frutas Holdings or the parent company thinks would be doing good moving forward. So although this is a relatively again small IPO, I think this would be good more for traders, no, than investors. But I think for investors, we can see really very good names, no, or even big companies at that, no, that can accommodate their money in the market. I think for me that would be a better way moving forward.
Okay, so may pera naman yung mga tao to put it here, and to still absorb these IPOs. Not too much IPOs yet. Aaron, final question. The budget might be delayed, and they're saying that this might affect financial markets. To what extent is this even being priced in? To what extent are we waiting on that to be signed for us to have a more, to have more confidence in the economy?
Well, in previous episodes, no, in previous episodes or similar episodes of this, I think there have been minimal effect on the market. But definitely, if the market gets dragged, if the budget gets dragged on further, no, moving forward, I think we can see it in the secondary rates, no. So higher rates would definitely be higher rates coming from this kind of causes, no, might be a dampener for the risk markets. So, but I think moving forward, no, if we can see better progress in this front, no, especially specifically on the fiscal side of things, no, I think moving forward. For now, we are seeing higher rates, but the higher rates we are seeing now might be more responsive on the possible recovery than any problem on the fiscal side.
Okay, so some fiscal, policy that might provide some stimulus for the economy would of course be appreciated. Thank you so much for all those insights. Merry Christmas and a Happy New Year if we don't see you, Aaron. That was of course Aaron Sai of First Metro Securities.
Thank you, Danny.
Here are other headlines we're keeping our eyes on. The death toll from Typhoon Odette has risen to 397. The latest data from the NDRRMC shows that a total of 83 people are still missing as of this morning, while over 1,100 people have been injured due to the typhoon. The estimated cost of damages to infrastructure is now at 16.7 billion pesos. On the other hand, the Agriculture Department says the agriculture damage brought by Typhoon Odette is worth about 6 billion pesos as of December 27th. In an interview with us here on Business World Live, that was yesterday, DA Assistant Secretary Noel Reyes said that they expect agriculture damage figures to increase even further. This as LGUs continue to validate the damaged areas in 11 regions battered by Odette. And the Philippines remains to be the second fastest growing market for vehicles in Southeast Asia. The Philippine Star reports that both local production and sales of automobiles accelerated by over 20% in the 11 months to November. In that period, the Philippines only trailed Indonesia, which saw its motor vehicle output soar by over 61% year on year. Meanwhile, the Philippines topped the region in terms of motorcycle production and sales. That's as assembly grew by almost 43%, while sales grew close to 22%. And that's a first look into the business day. Today's Tuesday, December 28, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.